welcome to Rand and Aspen's monthly market commentary for June. We're once again joined by Peter Armitage, the CEO of Anchor Capital. Pete, the Swiss was down 4% this month. What were the major drivers behind this?
I think the South African market followed pretty much what happened internationally. Some scares around China, the up and down story there. The US market, really all led by the US market and the US bond yield picking up. And that had a dampening effect right across our market. At one stage, we were down over 9% in our market and ended up down 4%. So a bit of a recovery and an indication that it's kind of a movement along a volatile trend rather than it being any kind of, we don't think any downward sustained move.
Rand volatility was a major theme these past few months. Can we expect this to continue influencing the markets?
Yeah, I think trying to make calls on where the Rand's going from week to week or month to month and the effect on the markets is a bit of a mug's game. I mean, nobody can do it with any kind of consistency. I think the bottom line is share prices have certainly reacted to the Rand's new level. So don't expect Rand head shares to kind of continue moving unless the Rand moves some more. I think there is a chance that the Rand still has a bit of a spike. I don't think just because it's settled down for a week or two, that means that it's settled down for the year. So I think we can expect some volatility in US markets and local markets in the currency. And the investment approach at times like these is to stick with the shares that you like, perhaps keep a little bit of cash to the side, because if markets come off, put some more money into shares that you like and shares that you've got in your portfolio. And that's kind of, I think, a considered approach rather than panicking and worrying and trying to chase the market day by day.
Aspen has performed very well in June amongst the large cap shares. What is your view on Aspen?
Aspen's been one of our favorites for many, many years, and the announcements that they've come out with in the last few days indicated why. It's a company in a unique position from a global perspective, able to do deals with a lot of big pharma companies. It's a relatively small business on the global scale and is able to pick up niche kind of products and off-patent drugs from the big pharma companies who are moving on with their next big patent dream. And with that, they're building up distribution networks into Latin America and into Southeast Asia off the back of their number one placings in South Africa and Australia. So we really like the story. It takes quite a special management team to kind of pull off the deals that they've done. Very accretive. The Merck deal adds about 20% to Aspen's earnings. So Aspen's bounced from 180 Rand to 230 Rand. In the short term, that might well be enough. But we think in a year's time, this is easily a 300 Rand share.
Pete, what can we expect from the markets in July?
We've got absolutely no idea what the market will do in July. I think anybody who gives you a firm view over what's going to happen over the course of a few weeks in these conditions is a little naive. We think that you've got to stick with your fundamentals, stick with the companies that you like, buy in on lower prices. But I think taking the lead from internationally, the US market has leveled off a bit, but I think we'll end the year higher. We would expect the Rand to follow a bit. Ironically, the only thing that might keep our market lagging a bit perhaps is a stronger currency. You must remember that has an impact of lowering the share prices of a lot of our companies that are listed offshore. So we can still ultimately, we bottom-up investors. We can still construct a portfolio where we think the shares have got good growth prospects and underlying prospects. And that's the kind of approach we're taking right now. Where the actual index goes, which is full of big, expensive companies, we don't have enormous conviction at the moment. There are times when we have strong feelings about the market and times when we don't. At the moment, I think volatility will continue to reign. We would remain fairly fully invested in the market because we can put together a portfolio of shares that we think will give good returns. But I think the big trend is, the big market mover over the course of the next 6, maybe even 12, 18 months is what the Fed's doing in America and what impact that has on bond yields in America and flowing through into emerging markets.
Thank you for joining us once again, Pete. For more information, like us on Facebook, follow us on Twitter, and join us on LinkedIn.